Our goal is to be over $2 million in ARR.
By December.
Yeah.
You are listening to Conversations with Nathan Latka, where I sit down and interview the top SaaS founders, like Eric Wan from Zoom. If you'd like to subscribe, go to getlatka.com. We've published thousands of these interviews, and if you want to sort through them quickly by revenue or churn, CAC, valuation, or other metrics, the easiest way to do that is to go to getlatka.com and use our filtering tool. It's like a big Excel sheet for all of these podcast interviews. Check it out right now at getlatka.com.
Hello, everyone. My guest today is Santi Biblioni. He is a Silicon Valley-based technology entrepreneur and co-founder and CEO at a company called Core, the next generation solution for creative and professional teams that intelligently suggests how to manage your projects, teams, and finances. Prior, he founded Balloon Group, one of America's fastest growing digital agencies, among other businesses. Today, he continues to grow Core and is also a sales and fundraising mentor at 500 startups, as well as a speaker and jury in big technology, advertising, and entrepreneurial events. Santi, you ready to take us to the top?
Hi, Nathan. Thank you for having me.
You bet. So if people want to follow along, the URL to your website is project and then cor.com. So that's where they can follow along. But tell us what the company does.
So we're the project's profitability platform. What we understood is that in the billable hours market, like all companies that sell hours, project management is not a problem. The real problem that is behind project management is project's profitability. Consulting.
So you're selling directly to agencies mostly?
Yeah, so we sell to agencies, to consulting firms, to law firms, accounting firms. These companies that are selling hours, they need to understand their profitability in real time. And the reason why this was not happening before is because no one wants to log hours, right? No one wants to log hours because it's tough to log hours manually. I mean, everyone's hate it. And at the same time, everyone feels that logging hours is for their control. Managers controlling their time. The reason why we are educating these people on time tracking is because we are automating this with AI. And at the same time, we are letting them know that this is the way where managers can understand their costs to better negotiate fees with the clients. This way, you can hire more people, you can increase salaries, and you can have a healthier company.
Understood. And how are you differentiating yourself from like pure play time tracking tools like Time Doctor or more like task management tools like Basecamp, ClickUp, or Monday?
Great. So that's a great question. We're not a project management tool. I mean, we are a vertical solution, an end-to-end solution for professional services firms. It means you have machine learning applied on modules like sending estimates and proposals, managing projects with reworks, with overheads, with fees, with brands and clients. You have clients' dashboards. You have everything, and you are integrated with different ERPs. You can standardize all your different services. So it's 80% of our current customers have switched from tools like Asana, Trello, Monday, ClickUp, you name them, Jira, Trello. So these horizontal solutions are great, but once these companies try to professionalize them better, they need to jump to a vertical solution. That's what happened with Procore in the construction vertical, for example.
I see. And so when they do jump to you, on average, what are they paying you per month to use your technology?
Yeah, so they pay $30 per user per month, and they will have access to the whole solution. It means you'll send estimates, you're going to manage projects, fees, overheads, ERP, invoicing, and everything.
Mm-hmm. So what's the average? What I'm asking is not necessarily the per seat average, but the actual company average. When a company signs up with you, what are they paying you on average per month, would you say?
Today, our ACV is $19,000 per year. Yeah, but of course, we have like enterprise customers that are paying us over $100K per year. And we have some, but some not. We have a lot of SMBs who are paying, I don't know, like 5K a year.
Yep. That makes a lot of sense. So you have sort of different sales motions, sort of a upper mid-market at $19,000 ACV, then an SMB motion as well, which hopefully is probably closer to no touch, right?
Yeah.
What does your team look like today? How many folks do you have building this?
65, 66.
Okay. And what's the breakdown? How many would you say are engineers?
So today we have half and half. We have just closed our Series A, so we're going to invest 70% growth and 30% product.
Okay, but how many engineers of the 66 today? 30?
Yeah. Mm-hmm.
Okay. And I guess the reason I'm asking is when you look at your sales motion, do you have quota carrying sales reps, or is most of the selling happening no touch?
So as a company, we target more the enterprise segment. So we do have pre-sales like SDRs, and we have sales people for a typical B2B SaaS enterprise solution. So we have SDRs and we have AEs.
So how many total sales reps do you have in the sales team?
We have 12.
12. I mean, was this a key? And this must have been a key thing you had to think about going into your Series A. Is if you raise money, can you hire AEs at what quota to like start driving ARR growth? Right? How did you think about that?
Exactly. So we are aggressively hiring SDRs and AEs and investing a lot in lead generation today. And yeah, the way how we think about salaries and quotas is normally between 3.5 and 4x quota versus salary versus OTE. So we normally do OTE half and half for sales reps. Half and half means if you have an OTE of 150K, it's 75 salary, 75 commission, and then your quota is going to be like 3.5 or 4x that amount.
So take the 150K, your full on-target earnings times 3.5 to 4x. So something like $600,000 to $700,000 is your quota target for new AEs.
Exactly.
That makes a lot of sense. I mean, that's market. So tell me more about the backstory here. When did you launch the company?
So we launched the product like 3 years and a half ago here in SF in San Francisco. After going through 500 startups program here, we the co-founders are Argentinian. So I moved to the Valley like to launch the company. We made a company before that we exited most of it like 5 years ago, and we felt the problem firsthand. Mm-hmm. So the 3 co-founders, we know each other from like for long. Jose, who is my co-founder and CFO, COO, he has been also a partner on the previous company I started. So yeah, we've been 10, although we are young, like 31 years old, we've been 10 years working together.
And Santi, did you guys just split equity down the middle, 30, 30, 30?
We didn't. Because like we had like different positions on taking risks at the very beginning. So we compensated equity with risk.
Yeah, I see. Did any of the co-founders put in capital to get the business going?
Yeah, 2 of us, Jose and I, invested some of our capital just to develop the MVP.
Yep. So let's build up to your current Series A, but let's go back and start the MVP. How much did you guys spend of your own money to build the MVP?
It was not too much. I mean, like 10K to just like get a minimum MVP, a minimum viable product, get it like up and running. It was awful, but we launched it and we had like three to 4 customers with that, and that's how we got into 500.
That's very cool. And now, how many customers are you serving today?
Today we have 115 clients, more or less.
115. Okay. So it starts with your own money, and then it sounds like you raised some capital. So let's work backwards. You just raised, I guess, a Series A. How much did you raise?
We raised $6 million.
Okay, $6 million. And most of that capital you think is going to go towards your sales efforts, or is there a lot of engineering hires there too?
So we're going to invest 70% growth, which is like marketing, like all lead gen, marketing, pre-sales, sales, and post-sales. And then we're going to allocate 30% of the capital to product, which is already very robust and working pretty well with a great like customer satisfaction and more. And we're going to invest a little bit more in product, but like in features that are product-led growth. So it's product features, but that will be for sales enablement.
A lot of you guys will ping me out of the blue asking for help selling your software companies, but I'm not a broker and I'm really focused on Founder Path right now, not helping folks sell their companies. So I'm always looking for great tools to recommend for you guys to quickly figure out what you could potentially sell your company for and how much cash you could get. That's where Flippa comes in. Now, here's my thing about brokerages, especially for selling your company. You guys should not have to pay a 10% brokerage fee when you put your blood, sweat, and tears into building your company for years ahead of a sale. All smart founders know, though, that the best way to maximize price is to have multiple options. So how do you get multiple options, multiple bids on your company without paying a broker 10% or more? Well, I recommend Flippa because they have the largest list of buyers for these sorts of digital assets, which almost always guarantees a bidding war. I tell my founder friends all the time to try Flippa's valuation calculator to see what their company is worth. And I encourage you guys to do it today. Go to nathanlatka.com/Flippa right now to test out the valuation calculator for free. That's nathanlatka.com/FLIPPA.
Santi, I'm curious. I mean, coming out of COVID, valuations I'm just curious generally about when you guys raised the $6 million, you can give me a range if you want, but like what valuation do you guys raise at?
So we're typically raising at 25x revenue.
Okay. Got it. So how much of the company were you selling for $6 million? Like 15%, something like that?
Yeah. I mean, today we were lucky enough because we were growing at a 9.8% month over month. Yep. So that's like kind of doing 170, 180% year over year. That's like tripling revenue year over year. So we were lucky that we got a good valuation at this time. And yeah, we got diluted kind of like 10% on this bridge round because we raised 2 million and then we raised 4 at different valuations, different terms.
Okay.
The same round, but we were, as we were growing, we decided to split terms. And for the last 4 million, we got diluted like 10%.
When was the first 2 million closed?
Like a year ago.
Oh, I see. And explain to me the strategy behind that. Why close 2 million and let it roll for a year and then close another 4?
Because we were not raising money. We received a term sheet, an inbound term sheet, and the person. So we started the round with a venture capital firm, which is called Scop Venture Capital. It's whose managing director is Kevin O'Connor, the founder of DoubleClick, the largest company that Google ever acquired. Yep. So the company, the round was led by Kevin, by his fund, by Scop. Then we received an inbound term sheet to add more capital to the round, as we were not raising money, and this capital came from an individual, and this individual didn't want to take a place on the board seat. So we know that it's not typical, but at least it was pretty helpful for us. I mean, it was great because this person didn't want to take a seat on the board, but he wanted to deploy 1 million on us. And so we just like leveraged that 1 million. And as we had some due diligence, we knocked some prospects' doors, and we received 3 other million, and we made the whole thing as like although there are kind of like different rounds, and because there are different terms, we called it Series A, like all preferred stocks. There's the same stocks for everyone.
Yeah. And so was the 2 million that you closed a year ago at about like half the valuation of what you just closed the 4 million at?
Yeah. Mm-hmm.
Okay, got it. So you can do this and have different valuations.
Yeah. I mean, it's not typical, but and we didn't know before this that it was not on our mind to do this, but it's the way it went, and we were very lucky. I mean, not very much dilution, great investors. I mean, we had top VCs, and at the same time, great individuals. We had the founder Kevin O'Connor, the founder of DoubleClick, then Doug Smith, the founder of Anaplan, public company, the founder of Aquafold, sold over 1 billion, founder of Cracks, sold to Salesforce for over 1 billion, global CEO at Walmart. Marcus Galperin did a follow-on, who's the founder at Mercado.
Yeah, I get it. Yeah, I mean, it's strategic, but basically to sum it up, you brought in strategic partners, you sold 10% twice over the past year, 2 million on 20, and then another 4 million on 40, basically.
More or less.
Yeah, that's great. I think there's nothing wrong with that. It's getting creative. That's smart. And I mean, we can I can take 100 customers times the $1,500 ARPU, right, on average, which is a $19,000 ACV. And that puts you like somewhere around, what, 150 grand a month right now in revenue?
Sorry, say it again. 100?
Yeah, you said you have about 115 customers.
Yeah.
Times the average ACV, you gave me about 19 grand. It means you're doing something around $150,000 a month right now in revenue.
Average, yeah.
Yeah. Okay. Can you break $200,000 a month this year, you think?
Yeah. I mean, our goal this year is to continue growing into this over 9% month over month, and this will help us achieve. Our goal is to be over $2 million in ARR
by December.
Yeah, by December.
Yeah, and if you're at like call again 130, 140, 150 $1,000 a month today, where were you exactly 1 year ago? Do you remember?
Yeah, I mean, we're doing 400K if I'm not wrong.
Oh, and ARR.
Yeah, in ARR.
Yeah, wow. Okay, so a lot significant growth, very significant growth.
Yeah.
Cool. Okay, this is good stuff.
400 to 500K. I'm not sure.
Yeah. No, that's fine. That's fair. Regardless, good growth. And just as we wrap up here, where is most of the growth coming from? So is it mostly outbound, or are you doing other inbound things?
No, we started. We are a different animal. We started to do inbound after doing outbound. And we started to invest more aggressively in inbound, kind of like early this year. So we started with a great content strategy with SEO, then trying to expand our database to do more email marketing. So we're having most of our enterprise customers that come from the inbound way, because most of the enterprise customers come outbound. But the ones that come from on an inbound way, they come through email marketing, by like email nurturing on the database. That's enterprise. When it comes to the SMBs, it's mostly organic. It's mostly organic search through our blogging, through our blog, our content, our SEO.
And are they sticking? I mean, what is your gross churn look like over the past 12 months?
You're asking me for the greatest metric we have. I'm glad that you're asking. Our last 12 months churn is 4%.
Got it. And what's expansion on the same cohort?
Net revenue retention is 114%.
114. Got it. So you're expanding by about 18%. You're churning 4%. You're net 114.
Yeah. Mm-hmm.
That's great. Is most of the expansion coming from teams adding more seats, or do you have a feature-based or a usage-based upsell as well?
More seats.
More seats. Yeah, makes a lot of sense. Very cool. Santi, let's wrap up here with the famous five. Number one, favorite business book.
Start with why.
Number two, is there a CEO you're following or studying?
If I'm a CEO, what?
Is there a founder that you're following or studying?
Yeah, I really admire Marcos Galperin, who's the founder and CEO of Mercado Libre. They say Amazon for Latin America.
CEO of who?
Mercado Libre.
More Capital Libre. Okay, I haven't heard of that.
Mercado Libre is an $80 billion company in NASDAQ. He's Argentinian, and he started the largest tech company in Latin America.
How do you spell his last name?
His last name is Galperin. Marcos Galperin, Galperin.
Got it. Okay. Marcus Galperin. Very good. Number 3, what's your favorite online tool for building the business besides your own?
HubSpot.
Number 4, you're not in any acquisition talks with them, are you?
Acquisition, we had to.
Why'd you decide not to sell?
We're here for the long term. I mean, that's the answer. We didn't start this new company to sell it right ahead.
Yep. All right. Well, we'll see what happens there. Number 4, how many hours of sleep do you get every night?
Normally, human things, relationships.
Sorry, no. How much sleep do you get each night? Hours.
Sorry.
That's okay.
8 hours.
8. Okay. And what's your situation? Married, single, kids?
Married with 8 months baby. So when I said 8 hours, was like before the baby.
Wow. Okay. And you're 31, right?
Yeah, I'm 31.
Last question. What's something you wish you knew when you were 20?
I have no regrets. I mean, I'm pretty happy of everything I did and the things I didn't make.
Guys, Project Core, COR.com, launched back in 2018. They hit about a $500,000 run rate last year, now up to north of that. They've broken $1 million run rate, hoping to break a $2 million run rate by the end of this year. They just raised $4 million at a $40 million valuation, healthy revenue multiple, call it 25, 26x there. Team size 66 right now, 30 engineers, 12 in sales and marketing, using the new round of funding to bring in additional talent to keep pushing growth forward. A verticalized solution for marketing agencies to manage their project-based billing, hours, all that stuff. Santi, thanks for taking us to the top.
Thank you, Nathan. It was